We did have a few questions around Alibaba.
Mhm.
The first one here is, would you be open to disclose whether you hold Baba through ADRs instead of 9988 in Hong Kong? Wondering if there are any risks holding ADRs versus on the SCHK.
Yeah, I think we do own the ADRs, and in fact, because it's early, we have like short puts on those ADRs, and we're monitoring the development closely. Our view is that there is a risk of this delisting. Our view is that the probability of the Chinese Communist Party causing destruction to their capital markets by ripping investments out of foreign owners' hands is actually very unlikely. It's a nice narrative. It's unlikely, but we watch it carefully. So if, in fact, I have personal accounts where we do testing, I lose money in my personal accounts to test things before we put it into the fund. We are actively using some option contracts around DD just to see what will happen if there is a delisting. And so we are watching carefully. I think we will see it very early. And fortunately, because we use structured value, we get a nice premium when we exit. And so hopefully we see things early. If that were to transpire, we would exit or try to revert the shares over. But this is very common. People debate this a lot. Is it safe to hold the ADRs of a Chinese company? What happens if there's political conflict, et cetera? Our view, and I think a common view among very sophisticated people, is that it would be very disruptive to the capital markets. China is very well aware that they need the capital markets to persist, to continue their advance. And because of that, we do not think that they're going to disrupt the ADR channel. We believe that they will try to fit the US regulations, maybe negotiate. There might be some threatening times, but in many regards, that's what's giving us this great entry point right now.
I wanted to talk a little bit more about Alibaba and the puts that you're selling. The question is, since Alibaba is spinning off parts of the company, does selling Baba puts years out put you at risk of missing out on the spin-offs? So how far out of the expiry? Scott adds, this is what I was thinking. Maybe you only use a portion of your cash to sell puts and still have a large existing position. Having long-dated option defeats the purpose of having cash since it ties up your liquidity. Ryan notes, yeah, it would be interesting to know how this fits into a tranching strategy.
Yeah, that's a very insightful question. In fact, I'll try to discuss it two ways. We'll talk about it in terms of Baba, and then some of the things that could happen with Seritage. So these corporate events, a large corporate event similar to an unplanned dividend, the CBOE makes a ruling, and that ruling there are consistent rulings that take place. So if a firm divests a big business line, you actually either are rewarded by having a drop in the strike price of the contracts that you've sold, or you will have a non-standard option affiliated with that new position. So as these corporate events take place, we expect to actually maintain our position, maintain all of our exposure. We need to see on an individual basis what the CBOE does for these scenarios. So there is a risk that the CBOE could treat things incorrectly, but it's pretty low. They're a well-established entity. Although we do have times where we disagree with how they're treating certain scenarios, but realistically, we expect to receive the full value. When they spin out cloud, what we will receive is short puts on the new cloud entity. We will receive non-standard puts, or if as that spin out occurs, there's just a market value, but no option contracts, no non-standard option contracts, the CBOE will come in and they will reduce the strike price we've committed to pay for Baba based on the value of the shares that they've removed from their holding. So in the same way, if there's a special dividend, they do the exact same thing. If a company comes in and announces that they're going to pay out a 10% special dividend, the amount per share that's received will be reflected as an absolute amount drop in the strike price of those contracts. The reason this is important is that one thing people miss with Seritage, one thing that is very attractive for us and could still be attractive in the future and may be attractive for many of you, is that $9.20 they're going to pay out, those are not standard dividends. Those are going to be distributions. What that means to me is that the CBOE will make rulings each time they distribute capital, and the strike price will decline. So if we can be confident, for example, that there's going to be $5 distributed from Seritage, and we are very, very comfortable with that number, we can also be extremely comfortable selling a $5 put and picking up the premium, because each time that they distribute $1 to the shareholders, that strike price is going to go down. And at the end, the strike price will be zero, and a share is not going to sell below zero. And so we will never buy the stock. So we're just collecting free premium. Now, because it's a melting ice cube, we would rather do this with a growing business than a shrinking business, but some of you may still find this attractive. Seritage has some interesting things going on, but in both these scenarios, it all comes down to how the CBOE handles the divestitures that are taking place, how they handle special dividends, how they handle all of these corporate announcements. A lot of the situation going on within BABA, even though they are going to act as catalysts, they're basically going to signal to the market what the real value is. But BABA, the entity, may continue holding their shares of something that they IPO. They may IPO something, but continue maintaining their position. There's just now an external market price for that position, which is why it will act as a catalyst. So we won't always be losing what they're doing in their IPO. They can maintain their 30% position and go and IPO something like Fresh Hippo and just keep the rest of it on the books. And then internally, BABA will determine should they be selling those shares, which would then turn it to cash, but we would still own that cash, or should they maintain that position for future growth? And then we would be involved in, for example, the Fresh Hippo IPO.